now.
Well, let's talk to Stephen Schork, the editor of the Schork Report, which provides an in-depth look at global energy markets. Stephen, good to see you. Any surprise in this latest decision to increase oil production?
No, not at all. We had the technical meeting last month by OPEC. They well telegraphed their intention to maintain the status quo. Therefore, it is already and has been priced into the market. OPEC decided to take the prudent step to gradually increase the production. We're at about 2/3 of the production replaced now that went missing at the start of the pandemic. So the signals from OPEC are quite positive. No panic there. Their view on the latest variant of the COVID pandemic is certainly a positive sign. Keeping in mind at these prices, once again, commodity prices, especially raw industrial commodity prices, such as crude oil, are a great leading economic indicator. In this year, the market has gotten off to a strong start, so it's a strong signal of economic growth in the first half of 2022.
If you're a gas customer, of course, you'll be weeping as you read that gas prices are up 30%. Do you think higher energy prices are just here now forever and ever? Is this it?
Well, let's keep in mind, it all depends on your definition of high. If we look back over the past 2 years, yes, we've had a 50% rally in oil prices. That is high. But I venture, does anyone really want to go back to a year and a half, 2 years ago at the start of COVID? So those prices were artificially low because we shut down the global economy. Prices have since recovered. We're at a level now adjusted for inflation at the gasoline pump. We're certainly looking at prices that are cheaper today than they were in the early 1980s. So oil prices are at quite a comfortable level. This is a level that will continue to entice supply producers both within OPEC and non-OPEC producers to bring more supply to the market. There's also a level that the consumer can handle based on historical data. So that said, the gasoline prices, the consumer should actually be happy at these levels. I know that's kind of counterintuitive, but as I said before, commodity prices, raw commodity prices, are the greatest leading economic indicator. So the fact that we have recovered in the oil market is a great sign for the economy, therefore a good sign overall for the consumer.
Just beyond the headlines, in terms of oil, it seems production has been lagging behind despite the public commitment to increase the output. What's going on there?
Yeah, absolutely. Here in North America, it is a case of once bitten, twice shy. So the oil producer here in North America went whole hog into the market, and then they were hit with the Great Recession. And then they went whole hog again, and then they were hit again with the COVID mitigation. So we've had a tremendous amount of peaks and rallies. So the North American producer has been reticent to jump back in. Their bankers, the people who've lent them the money to produce, want to see stronger balance sheets. So we're now finally, after 6 months of rising oil prices here in North America, we are starting to see production respond. And as we said before, OPEC has taken the very prudent step to increase incrementally the production that was lost. So yes, we have had a significant production rebound relative to historical norms on these prices. But I do think now that we're looking at an environment of plus $60, $70 oil throughout 2022, you will see the supply response.
Stephen Schork in the United States, thank you very much.